Hello. Welcome to our next chapter, that is your agriculture income. So, agriculture income is very small, very less important for exam point of view. So let's do it quickly. So, what include in your agriculture income? Your rent of agriculture land, sale of agriculture produce, and income from nursery. All of these are included under your agriculture income. Now, sale of agriculture produce. If you are selling any agriculture produce, that is we are considering this point. So sale of agriculture produce, if it is in its raw form, that means you have not done any processing, it will be considered as agriculture income. However, if you have done some processing, if sale is after processing and process is compulsory for sale, if this process had to be done, that means you cannot sell it in the raw form. This will considered be agriculture income, that is your AI. However, if the process is optional for sale, that means it was not mandatory, it was not compulsory, you did it out of your own will. So now this entire thing is not agriculture income, correct? So we will subtract something. So fair market value of agricultural product processed, fair market value of the agriculture product that you had processed, that is your XX. You will subtract your cost of agricultural product. You will subtract your cost of agricultural product. That means your processed output. Whatever final processed output, first take FMV of that. Then you subtract your cost of agriculture product, that was your original product, your raw form. You will subtract that, so you get your agriculture income. Okay. Now coming to your next one, that is sale of final output. So sale of final output is the price at which you are selling. So you over here you only decided what is my agriculture income. Now we are deciding what is your PGBP income. So sale of final output minus your fair market value of agriculture use, that is how much agriculture you have used, that we will subtract because that will not form part of your PGBP, minus any further process cost that you incur, that is also not PGBP, and what you are left with is your PGBP, that is sale of final output minus what agriculture product you use, any further cost that you incurred. Now what is left is your PGBP income. Okay. Now certain activities they have defined, for certain activities, for certain things there is a certain percentage. So if you are growing tea and manufacturing, if you are tea growing and manufacturing, 60% of it is agriculture income, 40% is PGBP. So 60% is agriculture income and PGBP is 40%. For coffee there is bifurcated into two parts. If it is grown and cured, then it is 75% agriculture and 25% PGBP. What you have to remember in this is always agriculture income has your higher share. So you do not have to get confused between whether 60% is agriculture or 60% is PGBP. Always the higher percentage is agriculture. So if your coffee is grown and cured, 75% is agriculture income and 25% is PGBP. However, if it is grown, cured, roasted, and grounded, that means we have put more processes in this now. So our agriculture portion will reduce. It is only 60% agriculture and 40% PGBP. And last is coming to rubber. That is, if you are doing rubber, if you are making rubber, then it is 65% agriculture and 35% PGBP. Okay, so if you want, you can take a screenshot of this so that this table you are easy to remember. Okay, so these are your percentages. Now next is your how to calculate tax payable. How do you calculate tax payable? Is first is step one. So you will calculate tax on agriculture and non-agriculture income. That means your total income, you will calculate how much tax do I have to pay. Now second step, you will do tax on agriculture plus basic exemption. So for example, if your agriculture income was rupees 1 lakh and you are under the normal slab rate, that is your basic exemption is 2,50,000. So you will calculate how much tax would I pay on rupees 3,50,000. That is what tax you will pay. So you have already calculated this figure. You have already calculated this figure. Now step 3 is step 1 minus step 2. That means you have to take the difference of this. That is how much the tax payable. Because if you see, this is already tax only we are calculating. So first you have to calculate tax on your total income. Then you have to calculate tax on your agriculture plus your basic exemption limit, how much tax you would have paid. Subtract both of these, that will become your tax payable. And with this, we are done with this chapter, and I'll see the next chapter very small. I'll just discuss the format of income from house property. We will not get into detail, just how much is necessary, which little bit they ask in final.